Do you feel the sentiment here is better than 1 year ago?
I do. There seems to be much more energy and vibrancy with the Chinese consumer, which suggests that they have a lot more confidence.
The American market is not that exceptional.
But I do think you've seen geopolitical tensions as it relates to trade uncertainty start impacting markets. And I would say, particularly in the US,
Do you think he will follow through?
no one really knows what he's going to do. So I think just looking for those companies maybe that have less exposure to it.
In this time, what kind of playbook they need?
I do think you're going to see some investors want to take some of that and diversify outside of the US.
You mentioned a very important capital shift. Do you see this trend is something sustainable?
But I do think a more broader-based recovery that involves the consumer, I think is going to be required to sustain a bigger rally.
Now you're only allowed to enter the Pillar 3. Do you have any expectations to enter the Pillar 1 and the Pillar 2?
We're always ready and willing to help if that opens up.
欢迎收看《顶级投资人》，本期嘉宾是红利投资管理总裁兼首席执行官 Paul Lorentz。红利金融来自加拿大，是一家历史超过130年的国际金融服务集团，业务覆盖全球20多个国家和市场。红利金融旗下的全球资产管理业务都归于红利投资管理的企业品牌之下。截止2024年11月底，红利金融集团投资管理资产以及账户管理资产总值超过1.1万亿美元。其在中国成立的红利基金管理有限公司是中国第一家合资转外资全资控股的公募基金公司。值得一提的是 ，Paul 去年4月将公司全球管理团队都带到中国的时候，曾经来到过第一财经的演播室。时隔1年，再次做客顶级投资人节目，他对中国的感受是，无论是人们的情绪还是对未来的信心，今天都比1年前改善了很多。So thank you, Paul. Thank you very much for your time to join my show again. Nice to see you again.
Yeah, well, thanks for having me back, Ivan.
Paul, you come to this studio almost the same time last year. Do you feel the sentiment here is better than 1 year ago?
I do, based on the conversations I've had. I was in Beijing yesterday and in Shanghai today, met with a lot of partners, met with government officials, and that's the general sense I get in talking with them, but also with my team who's on the ground. So this is just one of my regular trips to China. Asia's a really important market for us, and we have a big business in China and excited about the growth opportunities. And one of the reasons I travel personally to the market is you get a sense for how the economy is doing when you actually come and visit.
Yes.
And so even from last year to this year, for me personally, there seems to be much more energy and vibrancy with the Chinese consumer, which suggests that they have a lot more confidence and maybe they're willing to start spending more.
We will talk something about the Chinese economy later. First thing first, at the beginning of this year, the broad consensus is something called American exceptionalism. But just 3 months in, obviously the American market is not that exceptional and quite interesting. The best performing market is Hong Kong H shares, especially the tech index. So what changed? Do you see this coming?
Yeah, well, I don't think any of us saw what's here now coming in its current form. But I would say we did see the U.S. economy starting to slow. You had the Fed, who was in a tightening cycle. They were raising rates, and we were waiting for them to start lowering rates because we thought the U.S. economy was going to slow down. But I do think you've seen geopolitical tensions as it relates to trade uncertainty started impacting markets. And I would say, particularly in the US, what markets don't like is lack of clarity. They like clarity one way or the other. They just like to know which way is the economy going. And I think this uncertainty is really caused a lot of pause in that market.
Now, the biggest uncertainty is from Washington. We see the headlines day by day, and the headline about tariffs on and off. Unlike his first term, President Trump this time acted more quickly and more aggressively, not only to China, but also to other countries, including Canada, your home country.
Yeah.
So what do you think of these tariffs?
I think the Canada and U.S. have a very unique relationship. We're each other's largest trading partner. We have integrated supply chains between the two. We're a major energy contributor to the United States. So I do think it's in the best interest of both governments to try and find the right resolution moving forward.
We see that the market reacted very negatively to President Trump's policy. Do you think he will follow through?
Yeah, that's a good question. No one really knows what he's going to do. I do think, though, from an investor perspective, a lot of investors are are trying to hedge themselves with where they're investing and trying to hedge themselves from some of the tariffs, potential tariffs coming in. So I think just looking for those companies maybe that have less exposure to it for a lot of investors is something that they're starting to look at now, just because there is uncertainty of which way he'll go.
Yes, exactly. We are in a particularly uncertain time. You are CEO of one of the leading asset managers in the world. So what kind of advice you will tell your clients in this time? What kind of playbook they need?
Well, I think there's a couple things. The first thing is you want to have options for investors in case they want to pivot their portfolio. They want to change markets, countries, or even sectors within a country. So that would be the first stage. The second thing we're seeing, regardless of equity markets, is just, particularly here in Asia, is the demand for income. So the more solutions we can build that are income focused versus equity market focused, trying to meet an income return, it provides a little bit more stability and cash flow to clients during these times of uncertainty. The two other areas we see is that while we're traditionally in traditional equity and fixed income, we also have a range of private asset classes: infrastructure equity, timber, agriculture, private credit, real estate. And we're starting to see, particularly the high net worth investor, starting to allocate more to these, which a little bit more certainty than traditional equity and fixed income.
What ultimately do you think will happen as a result of this tariff system?
Well, none of us really know what will happen, and I can't really speculate of the outcome. I think what's important, though, is to understand the potential outcomes for investors and really try and give them that breadth of solutions and understand how do you diversify your portfolio? How do you maybe shift some of your allocation if you were heavy in the U.S., particularly because of the outperformance the U.S. market has had. I do think you're going to see some investors want to take some of that and diversify outside of the U.S. Yeah. I think you're starting to see growth opportunities in markets like here in China, other markets. London is another good example, Europe.
You mentioned a very important capital shift. The better return market this year is Europe and China. Do you see this trend is something sustainable?
Yeah, I do think a lot of that will come back to the demographics and the growth of the economy. So markets are different than the economy, but a strong economy is typically good for markets. I do think what we've seen and what the government has done with the 2025 two sessions around just the commitment to growth, trying to provide broader support for the consumer. You talked about the rally in the H shares. Mm-hmm. A lot of that is driven by tech, by Gen AI and the hype around that and some of those companies in there. But I do think a more broader-based recovery that involves the consumer, I think, is going to be required to sustain a bigger rally. But I think as that confidence comes back to the market, particularly for local investors, I do think you'll see more money come into the market for that.
The DeepSeek frenzy means that it proves to the world that China can provide a very cost-effective alternative to the US models. Does that give a very good reason for the investors to reevaluate the Chinese assets?
I think it does. I think it does two things. One is, I think it reinforces that there's innovation in companies that are gonna come up and create investment opportunities that are different from the ones that exist today. And I do think you probably did see a little bit of an undervaluation in companies. I think this has brought it to the forefront, and that's probably why you're seeing some of that appreciation happen. I will say our investment teams here in China have also noticed those opportunities, particularly on the equity side. I think our equity team is ranked 6 out of 168 companies in the local Chinese market. And I think 44% of all their funds are in the top 10%. So I think they've also identified where there was undervaluation and opportunities, and that's one of the benefits of being an active manager in the market.
So during the past year, Chinese economies has experienced dramatic and up and down. So what's your takeaway?
I think a couple things from my perspective. One, I already mentioned that there seems to be more confidence in the Chinese consumer. They seem to be out more dining, spending. That's generally a good sign in terms of outlook, and it really is about the outlook. I think the second thing, though, is, again, a lot of the measures that the government announced in the two sessions help support that growth. One is the GDP growth, and there could be some slowdown to that in the second half if there are potential tariffs from the U.S., but 5% GDP growth is quite strong. But then more of the broad-based support by the government around monetary and fiscal spending for more of the broad-based consumer, to create that support so the consumer can really continue the rally beyond just the tech piece coming through, kind of the H-share rally. I think that's that's really encouraging. And as a company that's global with a big aspiration in Asia, at the company level, we're trying to get half of our total earnings globally coming from the Asia region between insurance and wealth. And China is such a big, important part of that, that when we see those signs of the government providing support, it makes us very encouraged in terms of the opportunities here, not just in the short term, but the long term.
This year, our Premier proposed to expand high-level opening up, and the most obvious expertise that you have is the pension management. You are a global leading pension manager. Specifically in this regard, in terms of opening up, what is your expectation?
Yeah, so I'm glad you called that out. The benefit we have is we're in markets that are quite mature now, and there's a lot of learnings from that. And then we're in markets that are very new and evolving. And so we have an opportunity to bring a lot of those learnings and really bring that to bear. That's really where I think our role is here in China. Is we know there's a massive retirement funding gap needs to be solved. I think the government's done some great things with Pillar 3 to start moving in that direction. And really our goal is how do we help in that process, whether it's education, whether it's solutions.
Let me put my question in this way. Now you're only allowed to enter the Pillar 3. And do you have any expectations to enter the Pillar 1 and the Pillar 2?
Yeah, so we think our biggest opportunity is Pillar 3 because of all the expertise I just mentioned. I do think a lot of our capabilities that we have both locally and globally make us a potential partner for Pillar 1 in terms of just pure investment mandates if they were to open up and look for third-party managers. So we're always ready and willing to help if that opens up.